All right, so this may be just slightly premature, but the WebBot has been talking about Bitcoin moving 3 times to this 408, then past it, then back down to or to 428, then above it, then back down. This could go up again. We saw that happen. It mentioned that Bitcoin would do this when Bitcoin had been flat. What was it, like 350, 360, not really moving much for quite a while. And then says, well, look for Bitcoin to do this. It freaking does it. And then it said, well, after that happens, we see silver taking a nice ride up in price. Now, it didn't say how much, other than noticeable. It's going to capture your attention. So we can all interpret it however we need to interpret that. But a little move here, a little move there, to me isn't that. Having said that, watching the price of silver just over the last several days, that sucker is up near 11%, 10.5% or so as of right this second, which I'm doing this video on the 8th of February, 2016, 9 p.m. Eastern Time. It's nearly 11% up in just several days. I mean, that's a pretty significant move. You could look at gold and the same thing has happened. So I want to just show you quickly. This is when I took the screenshot earlier, 1544. It was actually just moments ago, $15.50 for silver. I mean, look at gold. It's touching $1,200. It's been hovering at 1090, 1080, 1090. And again, several days ago, all of a sudden, it's up to, it's pushing 1,200. Same roughly percent move of about 10, 11%. So you look at this February chart, look at the January chart from the 3rd. It was pretty flat all the way across the board till we get to the end of January. We have this drop. Now that big drop you see, down to almost 1350 or whatever that is, that's when the old silver fix nonsense happened on the in London. The London AM fix, where they dropped at 84 cents and then instantly it rebounds, or soon right after that rebounds. Again, my point of that was, my opinion was there were some derivatives that had to be dealt with, and they had to push the price down momentarily to deal with that and then let the price rise back up. That's why the COMEX price, the LBMA, or the silver fixed price were 84 cents off, which is insane, my opinion. So, keeping in mind, this chart's only the 5th of February. Again, today's the 8th, so there's 3 more days in here technically. It's gone up. As you see, the chart shows 1490. We're at, again, moments ago, it was 1550. You look at that and say, man, it's only been several days. And silver and gold have absolutely broken out. It is absolutely noticeable. It's making some headway in some headlines. One of those, which I'll just kind of read you from Silver Doctors. And he says, here's Silver Doctor's full analysis and coverage of today's huge move in gold and silver. Again, referring to today, the 8th of February. Precious metals turned in beautiful moves today. Western conventional money and speculative hot money, both, are starting to flow into paper gold and are pulling silver along for the ride. And this is from Eric Dubin. Precious metals, I guess he says the same thing, turned in beautiful moves today. Mostly, he says, organic. And there are not a lot of cartel attempts to contain the moves. To see what looks like regular and normal profit taking following silver's blast higher today is truly quite unusual, and it speaks to the exact same underlying narrative I advanced before the COMEX open. Generally speaking, the cartel doesn't like to attack in the face of huge momentum. Some people were expecting a sharp takedown last Friday. Many expected the same today. If you want to understand why the exact opposite happened, read my post I published today before the COMEX market opened. Click here. So I'm going to open that. and see what he says here. Stealth gold bull market continues. Real-time analysis, Eric Dubin. This is fun to watch develop after 4+ years of never-ending extend and pretend acts of illusion conducted in service of management of perspectives economics, or MOPE, all with the hopes of reflating a broken financial system and with the necessary and therefore directly associated attacks on precious metals. We're finally seeing the paper trading conventional finance world of Wall Street and London begin to get a bit edgy. They're starting to move into buying paper gold, and that could very soon prove to be an absolute nightmare for the cartel. We've been here before, at a juncture where the paper buyers in the West start moving more aggressively into paper gold. Remember the December 2014 to January 2015 example I've spoken out about time and time again, and how the ramp up led to higher prices and a false breakout. You remember that? False only in the sense that the cartel came in late January 2015 and beat the sector down. The precious metals secular bull never died. Well, this time is indeed very different. This is not January 2015. The world is waking up to the fact that a brand new multi-headed Hydra solvency crisis is upon us. Bill Murphy can toss tomatoes at me later if I end up drawing attention, just like his GATA rockets sometimes do. Sorry, Bill, I couldn't resist. It should be also be noted that the current move in gold has now extended RSI to 76.99. That's very high, but in the current setup and context, I don't think it's too high. But we will see the cartel try to come back and push prices down once buying transaction flow signals that momentum is slowing. We're already seeing an attack on silver that, as the trading day has progressed, has started to weigh on gold. And again, this is a different article. Yet again, another example of managing sentiment. The funny thing about a solvency crisis and deflationary wave and how it's happening in European banking system most starkly, as Jason Barak and I discussed on the latest Welcome to Dystopia podcast. Heck, you can see that counter trend dynamic push the dollar up right now, and within the last hour or so. Tyler's over at Zero Hedge see it too, just posted, and here with a screenshot before their post even caught a moment. It's kind of a long article, so I just want to... He just says, an epic phase of the ongoing precious metals bull market is awakening right before our eyes. While the cartel can manage price appreciation from time to time, they can't do much to kill this new bull phase. It's too late. Too much has been screwed up beyond repair, including the destruction of a large percentage of forward gold and silver mining supply. The other day, Jason and I recorded one of our better podcast productions, which we talk about many subjects. I'm going to stop on this particular article and go back to the other one. There are new buyers hovering around the precious metals market. Read my Facebook messages to Jason Burek if you want to see me handicap, in real time, the visibility of their footprints, so to speak. Now, the most important new development is that Western conventional money and speculative hot money both are starting to flow into paper gold and pulling silver along for the ride. A new cartel-managed retreat is necessary, indeed mandatory. These geniuses have destroyed too much forward precious metals mine supply while turning the shadow banking system excess into a deflating monstrosity that would make John Law blush. In fact, the fact that a managed retreat as necessity is one of the takeaway points we can glean from 2016's precious metals actions to date. We're already seeing the cartel back off. The first phase of a general managed retreat is indeed happening right before our eyes. The cynics among you are no doubt thinking, what's going to happen next? Smartass, he says. Well, tomorrow or Wednesday is actually when we might see momentum slow enough to where the cartel will have the opportunity to act more aggressively. Generally, that too is well described in my article I wrote earlier this morning, but I didn't address how the COT reporting window fits into this picture. Given the nature of the reporting time frame, when bullion banks report their trading/inventory data to the CME each week, it's technically easier from a trading book management point to view or of view to conceal manipulation by executing the most aggressive action somewhere in the middle of a COT reporting week, where trades put on for for the purpose of manipulation can be managed, reversed to some extent, and hidden better just as part of normal trading/client book management. How many times have we seen that pattern? Enough said. For all we know, the data provided by the bullion banks to the CME is massaged. It's not like we live in a world where rule of law and sound regulation oversee our markets, and the change of the CME disclaimer regarding COT data is fishy, to say the least. The bigger picture forecast that I first presented during the fourth quarter of 2014 regarding the timing of the downturn and unfolding of the current bear market in conventional equities, and the timing and process by which the solvency rot would eventually become better understood, is indeed what we are seeing play out. In fact, it's playing out with many of the mile markers I talked about now visible in the rear view mirror, for 2015 would be the start of what I termed the crisis window. Second half, I guess we're talking about 2015, in process event for a multi-year bear market, and that a 2015 spike down a la 1987 was not the model for 2015, that Shemitah was BS and spun by those that outright misreported past bulls and bear market cycle starts and end dates to advance their thesis, that Greece was going to mostly be a 2016 story, not 2015, etc. For those among you that would like more context, look here to listen to my interview with Dr. Dave Janda, recorded back on January 18th, and last week's podcast Jason and I produced here. So it is looking like the club, or the cartel as he likes to call them, is allowing the prices to rise. There's a lot of momentum being put into gold and silver, paper market, of course. I just saw a chart the other day that's showing now, or recently at least, gold, paper gold to real gold, 500 to 1. I remember when 300 to 1 was breaking records. 300 paper contracts to one real thing of a 100-ounce contract of gold, of actual ounces, real gold. Because each paper contract that's traded has to have 100 ounces backing it. So if everybody who has a paper contract says, all right, let's demand delivery, here's the rest of the money, got my contract in my hand, give me the 100 ounces. What that 500 to 1 means, there's 500 people that are claiming your same 100 ounces, all of y'all same 100 ounces. 100 ounces to deal with, 500 people with claims on it. We've never seen such absurd levels. When it was 100 to 1, that was absurd. 200, 300 to 1 was even outrageous. And the last thing I saw very recently is now it's pushing 500 to 1. That means there is a lot of paper in the system, which also means there must be a lot more people getting involved in paper, gold, and silver, which means the club themselves has to produce even more paper, which is why 100 to 1 became 200 to 1, became 300 to 1, and is now 500 to 1, which also means the little small few percentages of people who have these paper contracts that settle demand delivery for that, they want the physical metals, just a little teeny tiny fraction of the outstanding contracts, but a little teeny tiny fraction of a drying up supply of gold and silver is putting massive, unbelievable strain on the club and their system. So this is just showing you that there is so much pressure, the price is rising. Doesn't mean for 1 second that they'll just not print even more paper to, as he says, manage retreat, push the price back down a little bit. Okay, there's too much volume, there's too much trading going on. Let's let it rise a bit. Let's push it back down. Here's another potential for this. The club doesn't care about anything that we're all talking about right now. That me and Silver Doctor fellas that I'm reading you. And they may just have a system in place that says, what time is it? Yep, 2016, February. Go ahead and let it rise. It's time to rise. Some other agenda, some other reason, whatever it is. At the same time, they may be saying, we have to let it rise. We've squeezed this turnip, trying to squeeze blood out of a turnip. We did it for as long as we could. We now have mining companies shutting down mines because they don't want to produce silver. Guys, we're going to be in trouble. We have no choice but to let the prices start rising. Okay, all right, let's go ahead and manage it on the way up. So that means they're going to manage it. It'll hit some new recent high and then come back down. And okay, dropped a little bit and it'll be pushed back up, come back down. All I know is that the WebBot report talked about after the move in Bitcoin, silver and gold, but namely silver, making a notable rise. So as I'm doing this video, knowing there's plenty of days left in this month and in this still near future, that, I mean, for all I know, in a week from now, it could be $16, it could be $17, I have no idea. And then say, okay, well, where's it moved in the last like 3 weeks? That 10% becomes 20%. That would be a huge move. And that would definitely be a WebBot hit. But I think I've seen enough at this point with a near 11% move in just several days that I'm going to go ahead and say, I think the WebBot is right on this one. Sure, it wasn't 10% in one day. I get that. But WebBot didn't say it would either be in one specific day. It's going to just skyrocket. It just said silver is going to move up. It's going to make a noticeable move. Precious metals in general, but silver specifically. And by God, that's exactly what's happened. So just wanted to report that to you, give you some other people's thoughts via, Eric Dubin via Silver Doctors. All valid points, but at the end of the day, the club does what the club wants to do when they want to do it and for the reasons they need to do it. So if someone would like to send me or some people, I'm going to look at this chart, and this chart says, we've got a technical breakout over here, and then it crashes. Oh, there's a new chart, new date. It's going to climb. I was up. Nope, never mind. Didn't happen yet. It's because the whole damn thing's rigged. But I think because of the way the world is turning right now, and the markets are looking like crap. Just a small percentage of the world, or the investing crowd, period, putting just a little bit of money into precious metals, yes, paper market, but that's what they'll do, is enough to cause a little stir up. And I think that's exactly what we're seeing right now. And if even more momentum comes from other sources or more people piling on, I would say we can expect to see a sizable price rise, because if the club, as I've said many times, decides to whack prices, it's a double-edged sword. We're going to pull up with the dump truck, fill the back of it, pull up with the boat, load the boat. Want more precious metals. You drop the price down, fantastic, give me some more. If the price rises too quickly, or not even quickly, just starts a trend of rising, which you could say it looks like it's happening. Even if it's just a slow, controlled kind of rise, you're still going to pull people in, because people are going to see it. Oh, it is. I thought this was the bottom. Apparently not. I better get in on that, and then they're going to get in. If it rises too fast, the momentum chasers come in. Oh my God, I got to get on that. Like in 2011. If the prices just kind of stay where they are, move up, move down a little bit, moves up a little bit, move down a little bit. What is happening right now will continue to happen. People are still stacking. Mining companies are still struggling. Producers, etc. The mining companies are producers. You had six, I'll give another finger, 6 of them drop off the LBM, the London fix. London Metals Exchange, I think, the fix, the London AM fix, because of that these shenanigans that happened the other day. That's a sign, and they probably realize we're not just dropping out. We will never allow you to set the price again because of what just happened. You dropped our silver 84 cents per ounce, which killed us. Imagine producing millions. That's millions of dollars you just lost. You produced millions of ounces? Yep. 84 cents per ounce. You just lost millions. Depending on how many millions of ounces you had, you've lost some millions. If you only produced 1 million ounces, again, 84 cents, almost $1, right? 1,000,000 ounces times $1 is $1 million. 84 cents, $840,000. If that was 1 million ounces. These mining companies ain't producing no little 1 million ounces. They're producing millions. So that's one company I'm talking about. How many of those companies just got royally screwed over by the London fix? They just shot themselves in the foot with that one. But I'm telling you, they would never do such a stupid thing unless a massive crisis was at hand, such as tens of billions of dollars, potentially trillions. I don't know, because there's some massive numbers in those with those derivatives. But some huge number of derivatives was probably affected, as I've said a few times now. And that's why they had to do it. COMEX says it's this price. The London fix, we're just going to rig it low immediately and settle something and then let it go back up. I'm telling you, that's what happened. So over the next few weeks, something from that should be taking place. Don't know what it was. We should see some kind of news, I would think, even if we have to kind of piece it together to see what kind of casualty took place during that event. But whatever it is, if I find it, I will certainly tell you about it. Take care.